Well, happy August, guys. It's August 2nd, 2010. My name is Joseph James. This is our live trade room recap. Guys, we're halfway through the summertime chop, halfway through. But I guess we got to be honest, though. If we have another month like July, guys, I'll take summertime 24/7, 365. Guys, another big day here in the room. Before we talk about the trades we took today, though, guys, I want to remind you about our blog. Lots of stuff in the blog. You can search the blog for specific topics. You can get in contact with our live support team. You can see our YouTube page, our Facebook page. You can follow us on Twitter. But most importantly, though, lower right-hand corner down there, guys, you want to follow the blog. Now, this morning, we called a live, right, on the blog, a live day trade on the blog, right? Very important stuff, guys. Follow the blog, right? That way you get everything brand new. If you can't follow the blog, make sure you guys sign up for our nightly newsletter. That way you get an email whenever we add something brand new. Now, how do we do today? Well, the 1st of August, a brand new month, a brand new trading week. But the same old story here in the live trade room, 188 ticks. We kind of thought for a second here this morning at 9 o'clock, we thought, oh boy, this might be August here, summertime chop and slop. We took a loss for our first trade. Didn't last very long, though. That small loss ended up turning around and becoming one of the biggest trades we've taken here all year so far. 143 tick winner there on crude. So we had, well over $1,000 in our pocket before 9:15, and then we just kept adding on to it on the Russell, on the crude. Of course, gold is still chopping around sideways right now. We'll talk about that in a second, guys. But 188 ticks today. We did 33,000 and change last month, guys. Do you think we can possibly do that again this month? I hope we can. We'll keep you guys posted, though. Month of August. Now, what's the most important thing that happened this morning? Well, again, we're in the month of August. Now, until we hit the first week in September, this is going to be one of the worst possible times of the year to be trading. Well, I take that back. It's going to be a great time to be trading, but it will be giving us lots of opportunities to make it a very bad time to trade, right? With volume going up and down in those summertime months of July and August. So now here in August, you've got a lot of day traders that are planning big vacations in August, right? They're getting the barbecue up and running. They're out in the boat, right? They're going on vacation with their families. August is always going to be very similar to the last 2 weeks of December, which is when the day traders out there know this is their time to get their vacations taken, right? This is when day traders go on vacation. End of August, end of December, and then don't forget the end of the first quarter, right? End of the first quarter is also a big time of the year. Okay, so right now, first week of August, Monday morning, we're going to expect to see a slow start to the week, guys. We always have that slow start to the week on Monday mornings. Now, what's happening, though, is during the summertime months, gold has now jumped from the 810 contract. It jumped the 1010 contract and is now trading the 1210. And, guys, I really, right, for the life of me, have not been able to figure out, except for the speculation last week from that GDP number, I really can't figure out what the overall underlying fundamentals were that caused it to do that. But what's happening now is since gold jumped to the 1210 contract, now we need to fill in all of this price action. Okay, so if you look at your gold chart right now for the 1210, you're not going to see all this data. You're going to see just a little bit of data. Okay, so what we need to do is we need to wait for gold now to fill in that missing data and give us some support and resistance and some levels to use. Okay, got to wait for that. Now, crude oil is where we made our money today, right? I'll take gold going sideways any day of the week if we keep grabbing trades like this on crude. Now, crude we saw this morning at the highs of the bracket, so we took a breakout trade for 143 ticks, the first thing this morning. Okay, so remember, guys, August, slow volume, but we're going to have times of great volume and times of slow volume. Okay, so we start the month off on a good note here, but I want you guys to remember the fundamentals of trading during August. Right? Beware of the slow times and trade during the fast times. All right? Let's take a look at how we did today. Now, here was the first trade we took this morning. Here was on crude here. This is what the market looked like when we opened up our charts. So about 8:30 this morning here on the crude, this is my 34 range chart. And guys, a 34 range chart, very similar to a 8 to maybe a 13-minute chart. Right, something pretty slow there. So it's a slower time frame. It's not a scalping time frame. It's really not a day trading time frame. It's more of a swing trading or a position trading time frame here on the crude. Now, what do we see right here? I can see right off the bat here, guys, we are trading in a sideways range here. And of course, what do we see right away? We notice right away here, where are we? We are towards the high right, of this range. So here we are now, right, at the high of this range. Okay, now, what do we know about this? We know we're going to sell the highs and buy the lows, but then we also see a wedge pattern here. How do we treat a wedge pattern? We treat a wedge pattern by looking like this, right? So here's your wedge pattern. We'll do the same thing here now, right? Trading inside the wedge, we're going to sell the highs, right, and buy the lows. So we're going to sell the highs of the sideways range. We're going to sell the highs of the wedge pattern. So right off the bat here, we're thinking to ourselves, what, right? Getting short. Okay, that's the exact thing that we thought was going to happen the first time today. Okay, so at about 8:45, 9 o'clock, we see nothing more than we are at the top of the range, right? And the top of that range is also the top of a wedge pattern. And so here we are now, we're thinking to ourselves, right, this couldn't be any easier. Let's get short. And that's exactly what we did. We looked for our first trade of the day. It was a short trade because we saw we're at the high of the range. We did exactly what we should have done. We waited, of course. Now let's go back one slide though real quick. What was that price level here? What was that price level here? Right here. 80s, right? That was my price level. Okay, so we know real quick here, 80, right? 80 even, that's my price level. Now let's keep moving here. First trade of the day. Where are we? We're just above the 80s now. So now here we are, we've broken above the 80s, right? The 80s were down here. So now we've broken above the 80s, right? Broken above the 80s. So we know now we've broken to the upside of the range. But what does that mean real quick? Look over here, lower right-hand corner. I've now done this, right? I've broken out to the upside now. And so now what I'm going to do? I'm going to look for price to fade back into the bracket. So I'm going to look for an entry here short, going back down into the bracket to give us our short trade here. Right, guys? We love seeing price break out to the upside like this because that usually means we're running stops. It usually means we're faking out, right, the breakout to get all those rookies on the long side. And then, of course, professionals come in and they will sell this thing, bring it all the way back down. That was the idea. The idea, of course, in theory, did not quite work out. And you can see what happened right here. Now, back up to my chart here. We've got, of course, we're above the 80s. So we're thinking, right, here's the high of day. I'm going to wait for the price to break below that swing low, and there's your two-step pattern short, right? So take the short trade, selling the highs. That's always going to be a great place to get started. So here at 9 o'clock, 80.43 was the fill. What happened was I got into this trade. Momentum then quickly then shifted and pointed up. As you can see here, we saw big buyers. Momentum curl against us. Increasing speed now to the upside. And that told me two things. The first thing it told me was to get out of this trade, right? Exit now, right? That was the first thing that told me. And the second thing it told me was look long, right? We made the wrong decision. We were on the wrong side of the market here. So again, I look for the two-step pattern short because I was at the highs of the wedge and the trading range. We always try to sell the highs. So that's, of course, exactly what I did today. But you can see what happened once I got in that trade, though. It quickly told me big buyers, increasing speed, momentum curled against me, right? It quickly told me, hey, Joe, wake up. You're on the wrong side of the market. And so, of course, what happened was it then told me, first, get out of my short trade, and second, now be on the lookout, right, for a reversal now and go right back up to the upside. Okay, now, we could have taken this here on my 4 range chart. You can see here, it did set up here on the 4 range. All right, but at the same time, though, we noticed our 13 range chart was also setting up. And a 13 range chart, if you guys are with us earlier on in the summertime, the whole entire month of July, we kept piling up ticks here, guys, of profit on that 13 range. So, of course, we immediately now quickly move over to our 13 range chart, and now here we are. Okay, so once again, we knew we had to be above 80s, right? So we're above 80s down here. And you can actually see here, there was an earlier entry here. That entry, now a bunch of our members grabbed this entry here. Okay, you can see though, it doesn't happen until about 8:15. So it was really kind of a real early entry there. By the time we saw it, it was up top here. And so of course we had to break above overhead resistance, mark up our swing high, and there's your breaker pattern long. Now we entered here 80.55. And once we took our first target at plus 14 off, so 2 off of 14, that's 28. Our second target at plus 20, we then had to make a decision as far as where was our final target